Whenever Tesla becomes unpopular, the most common criticism it gets that it's just a car company instead of a high-tech or an AI company that Elon Musk claims to be. So today, we will conduct a valuation of Tesla and figure out how much value the EV business has. So it's an analysis focusing on its downside. Let's start with projecting the EV revenue into the future. Here we will use three key drivers. First is looking at the global auto market overall. Auto business is mature already, so for the next 10 to 15 years, we assumed a slow growth. However, within this auto market, current EV penetration is only about 16%. So even though the overall market grows slowly, the penetration rate can expand very quickly. And this EV penetration is our second key driver. And third driver is Tesla's market share within this EV market, which is currently about 13 to 15%. And as the market expands very quickly, we can make some scenarios where Tesla becomes more dominant or less so into the future. Let's look at actual number for the global auto market. Completed vehicle sales in units was about 65.9 million in 2005, and it grew to 89.4 million in 2023. So for the past 20 years, it grew at about 1.3% per year. And going into the future, I relied on 2 to 3 market research data, which calculated the market to grow about 1.5% per year for the next 10 to 15 years. So by 2035, the market will sell 107 million cars. Moving on to the second variable, the EV penetration grew from less than 1% in 2014 to about 16% in 2023. And again, for the future projections, I relied on 4 separate market researches, which projected a range of 50 to 88% of penetration by 2035. But when you're conducting a valuation, usually it's better to see the stable state, where key driving factors stabilizes. So here, I extended the projection to 2040, where the market penetration will be 100% for the bull scenario and 70% even for the bear scenario. So basically, in the next 15 years, the global EV market will be more than 100 million cars by 2040 in the best case scenario, and about 60 million cars in the worst case scenario. And next, we have Tesla's market share within this EV market. Looking at the historical numbers first, Tesla's market share was about 10 to 17%. And in recent years, it's falling because in the Chinese EV market, which is the largest in the world, Tesla's market share is about 10%, and its competitors, mainly led by BYD, is performing much better than Tesla. And when I project the market share into the future, I use 3 scenarios. In the first one, I assume that Tesla's dominance in the EV market will be similar to Apple's dominance in the smartphone market. This is quite bullish because Apple currently has about 30% market share, which will be more than double of Tesla's current market share. And the second base case, I assume Tesla's current market share continues into the future. But here, instead of just using the 12.8%, I used about 19% number because Tesla currently only sells in the high-end and mid-end market. But as we saw recently, it launched into the truck market with Cybertruck, and the company will definitely roll out lower cost models in the coming years. And in the third bear scenario, I assume that Tesla's market share will be similar to Toyota's market share in about 10 years. This will lower Tesla's market share to about 11%. However, Toyota is currently the number 1 player in the global auto market. So I would say that even in this bear scenario, I'm still assuming that Tesla will successfully be one of the major automakers in the world. So now we laid out the 3 key drivers, we can see how much cars Tesla will sell in 2035 and beyond. In 2023, it sold 1.8 million cars, but in about 10 to 15 years, it will sell between 8 to 20 million cars. And based on these unit assumptions, if we just apply the average sales price of Tesla cars, then we can get its EV revenue projections. And for the ASP, we can see in this historical trend, the average sale price is falling from about 95,000 to 45,000 in the most recent years. That's because in the beginning, Tesla definitely had a premium, a sports car-like merit, but as it's rolling out cheaper, more general use models, its average sales price is falling. So going into the future, we can again make a bull-based bear assumptions and project out its revenue. And for revenue, let's first look at its historical numbers. It grew by more than fourfold in the past 5 years, so it's definitely growing quite well. So now let's shift these numbers into the left corner and project out into the future. Current $80 billion of revenue will be between $350 to $950 billion in the next 10 to 15 years. And just to sanity check these numbers, I brought in Goldman Sachs' projection in 2030 Tesla EV revenue, which will be between $200 to $400 billion. So if we compare that number to our projection, which was about 236 to 463 billion, it's definitely in line, and our numbers are a little bit more positive. And when we look at Tesla's 10K, its EV revenue is less than the total revenue, and that's because there are some extra revenues in between. And these other revenue sources includes supercharging stations, solar panels, and battery storage. However, what investors are more excited about are FSD, robotaxi, and even Optimus humanoid robot revenues. So whenever we talk about Tesla's future, we cannot completely ignore these non-EV revenues. So let's discuss them briefly here. These other revenues we talked about have high potential, so they can actually grow quite a bit going into the future. And the way we can project these out are separate them into these 8 parts and project each of them as we did for EV. But since that's gonna involve a lot of numbers and long discussion, and the main purpose of this video is to value Tesla's EV business, we will simplify these other businesses into additional value. And the way we are going to project it out is look at Apple's case. So for Apple, about 53% of its revenue is from iPhone, and the rest is from additional values from selling other hardwares and also pure service revenues. So we can apply this Apple's case into Tesla and say that Tesla's main product is its EV base, but it can create additional values, which amounts to about 50% of the total revenue. So going into the future, the numbers will look like the following. So keeping this in mind, let's go back to the EV revenue for Tesla in 2040. Since we used various cases, we can project the revenue number into 3 cases. So in the most bullish case, Tesla will have $1.4 trillion of revenue in 2040, which will be 18 times its current revenue. And the base case will be 760 billion, and in the bear case it will be 360 billion, which is still quite significant and possible because it's more than 4 times its current revenue. And starting with this revenue, we can move on to Tesla's operating profit from this EV business. And the operating margins we will use, the first one come from the most aggressive sell-side estimate on Tesla's EV business, which was 20%. And the base case we use is the most recent actual Tesla's auto operating margin, which was 9.3%. And the bear case comes from the 5-year average operating margin from other top 3 automakers. So if we multiply the EV revenue with the 3 scenario numbers that we just saw, we get 3 possible numbers for the operating income in 2040. We can now move on to the valuation. And here again, we will simplify the process instead of going into the nitty-gritty detail. So with this EBIT number, we need to find appropriate multiple for this business. And since we are looking at Tesla as just a car company instead of tech company, we will use top automaker OEM's 3-year average EBIT multiple, which comes out to be 13 times. And to be a little bit more aggressive, I will also include Toyota's multiple, which is the number 1 auto manufacturer and had 16 times EBIT multiple for the past 3 years. So if we apply these numbers to the EBIT, Tesla as a car company will have the following enterprise values, which is quite a range between $430 billion to $3.9 trillion. But if you look at just these enterprise numbers, it doesn't feel very tangible. So I changed this number to the enterprise value per share based on Tesla's number of shares and also applying the present value concept. And Tesla's auto business will have about $24 to $220 per share of value. And we can easily compare this to the market price of $170 per share. And for the bullish case, we are assuming that in about 10 to 15 years, 100% of the auto market will turn into electric, and Tesla will have Apple-like dominance in the market and have more than double of operating income margin compared to its peers. So it's a very aggressive number, and as we can see here, it comes out to be higher than current market price. So it looks like we don't really need to worry about this bullish case. So now let's look at the base and bear case. Here, it's obvious the auto business alone doesn't meet the current market price. However, as we saw before, Tesla has other additional businesses that can close this gap. So for the base case, Let's apply the same logic that we saw through Apple. So since the auto business has about $57 per share of value, we say about the same value comes from other businesses that Tesla plans on, which will be about $57. So if we add these two numbers, Tesla's value will be $114 per share in this scenario. And we can do the same with the bear scenario and get $48 per share. So through this simplified exercise, we now calculated how much value Tesla has if it's simply a car company. So in the first case, if it has Apple-like dominance in the EV market, its value including the blue part will be well over $300 per share. But if not everything goes perfectly, and Tesla remains a good EV OEM, its value will be only $114 per share. And in the worst, but still possible case, where Tesla becomes major company like Toyota but nothing more, its value is about $50 per share. So here we can see that about $114 per share could be the price that we are willing to pay if we assume that Tesla to be just a good car company. Obviously, current market price is much higher than this, but if you look at the historical trend, Tesla share price hit $113 in the beginning of 2023. And the company's share price is falling recently, we might be able to catch this opportunity again in the near future. Also, we don't need to stop here, because we also can focus on other major businesses like FSD, Robotaxi, and Humanoid. It's harder to quantify these businesses because they don't generate significant revenue right now. However, I still conducted a DCF valuation on these businesses based on market research and also what the industry leaders have said about these businesses. So if you want to check out a detailed DCF analysis on Tesla, please click the link below and you will be able to download the full DCF model. Thanks for watching today, and I will see you guys in the next numbers analysis on big tech companies. Thanks guys.